Hello traders, this is Jim Comiskey coming to you live from Archer Daniels Midland Investment Services. It is currently Monday the 26th, about 2 o'clock. First of all, let me just say that I've noticed some of the comments that you all have left on the comment chain on YouTube. I'll endeavor to do 2 10-minute videos a day. Of course, it depends on market conditions, okay? Anyways, I'm here to give you some color on the metals complex, amongst other things. And let me preface this by saying that the opinions that I'm no doubt about to express are mine and mine alone, and are not necessarily shared by Archer Daniels Midland Investment Services or its principals, even though they probably should be. Anyways, helicopter Ben over the weekend rolls out the prospect for another quantitative easing. Okay, so we've got a tremendous rally here in silver, gold, energies, indexes. Gold is currently at $16.89.20, up $27. Silver is up 57 cents to 32.84. Okay, support resistance here. Gold. Okay, well, we're basically through all resistance. Okay, 16.83 will act as first support. Okay, below that 16.75, 16.58 is third support. All right, you're going to have resistance coming in at 1693.5. The psych level $1,700. Okay, above that 1708.50. Okay, silver. The pivot today is, well, same deal. We're through all resistance here. Silver 32.84. We do have a little bit of resistance, 32.88. Okay, above that 33.05. We have support coming in 32.60 and 32.02. Yes, I think you should carry on stacking. Okay, if anybody's wondering. There's numerous reasons to want to continue to basically hold the physical. Okay, if you're trading futures, be extremely careful. In other words, use stops. Okay, if you'd like to trade futures with me, give me a call at the desk. My number 888-935-7979, or just shoot me an email, jim.comiskey@archerfinancials.com. Okay, on to the rant. All right, first of all, this is classic. All right, yeah, I'm going to carry on talking about it, unleaded gas. All right, I think that's going to be a major factor coming into the election. In fact, I think you're going to have two other major factors as well. Okay, one is going to be the Supreme Court's decision on Obamacare. Okay, by the way, great comment or great headline came across the tapes earlier. Nancy Pelosi to the Supreme Court: give us Obamacare or give us death. It's on Reuters. Nance, careful what you wish for. Okay. Okay. So it'll be the Supreme Court's ruling on the constitutionality of Obamacare. Okay. Price of unleaded gas. Okay. And basically, the 2 months before the election. Okay. This is under everybody's radar. No one's got this right now. But the U.S. government's going to run out of money again. All right. So we're going to have the debt ceiling front and center for the election. Okay. Late in the cycle. All right, so the evil speculators. According to Senator Bernie Sanders, independent out of Vermont, he put together a letter that was signed this week by 70 members of Congress, okay, to regulators at the CFTC, urging immediate action on oil speculation by enacting strong position limits and to utilize all authorities available to make sure that the price of oil and gas reflects the fundamentals of supply and demand. I'm just going to go on and read a little bit more. This is on Yahoo Finance, by the way. Okay, the CFTC. I'm going to carry on reading. The CFTC was given authority in the Dodd-Frank Wall Street Reform and Consumer Protection Act to impose position caps on oil traders beginning in January of 2011. These limits have not yet been implemented by the CFTC. I mean, these are people that stood by while one of the biggest financial frauds in the history of mankind under John Corzine, okay, went down. Okay, and now they're supposed to be in control of energy prices. Okay, I don't think that's going to happen. I think Mr. Market is far bigger than any governmental entity. In fact, I know he is. Okay, so I'm just going to carry on a little bit here. First of all, if you follow me, go to my March 9th video. Okay, what is it? It's 26 today. I've been talking about it since the 9th. I mean, okay, first of all, the EPA, basically, I'm jump back to the Investors Business Daily now. Okay. The untold story behind soaring pump prices is that major U.S. refineries are going out of business and creating at least regional shortages, thanks in no small part to costly EPA rules. Over just the past 6 months, 3 refineries supplying 50% of gasoline, diesel, and jet fuel to the East Coast of the United States of America have closed down. Okay, Bernie and your ilk, the speculators have very little to do with what's going on here. This is pure supply and demand. And for you to call in the CFTC to support a basic law of supply and demand, look, the market's always right. It ain't you, okay? 50% of all the energy production on the East Coast of New York, of the United States, is gone. Okay, I'm going to go on carry on reading this. Okay, yeah, the 2 owned by Sunoco, they say they simply cannot make money anymore. Philadelphia-based Sunoco's refinery business in the Northeast lost almost $1 billion over the past 3 years, okay, as U.S. demand for gas fell and the cost of crude soared. But over the same period, it had to shell out significant expenditures for environmental projects and compliance activities to satisfy onerous EPA mandates, according to the company's latest 10K report. Okay, this isn't speculators, Bernie. Okay, in fact, it spent more than $1.3 billion just to comply with stricter EPA rules, which carry stiff fines and penalties for violations. Sunoco fretted that these regulatory costs will grow exponentially under the Obama administration, which has hit some of its refineries with fines. Another factor that is contributing to the increased price of gas is the fact that, okay, in 1981, the number and capacity of U.S. refineries was at its apex, okay? Since then, 171 plants have closed, okay, for various reasons, but for the most part, onerous EPA regulations, okay? We've had, the last refinery built in the States was 1992 in Valdez, Alaska. Prior to that, it was like 1973. A big 83, sorry, a big one of consequence. Okay, and so you got 2 Sunoco plants in the Philadelphia area, and then you've got a Virgin Island refinery that was also exclusively refining energy for the East Coast. Gone out of the market, out of pipeline, and that's why you're going to have gas at say $6 this year easily. Well, certainly in Chicago, we're at like $4.60 now. By the way, I just came across a headline not too long ago that gas is averaging over $10 in Europe. Well, according to Stephen Chu, I guess that's a good thing. All right, buddy of mine here at Archer, at Admis, okay, Blake Robin, pointed out something to me. He's in terms of these evil speculators, okay. The open interest, total open interest in the crude oil contracts, 299,243 open positions. This is as of Friday's close, by the way. Okay, so if you take the contract the way it's written, it's a 1,000 barrel contract. That's 299 million barrels of physical that are represented by that open interest. All right, the world currently consumes approximately 90 million barrels a day. So you're looking at 3.5 days of world consumption. Okay, out of those evil speculators, 3.5 days. Okay, so you know if we're gonna play the blame game, let's point the fingers where they need to be pointed. All right. Also, let's talk about this. Okay, and I'll wrap it up. Came across this. This was from Zero Hedge. Shout out to Zero Hedge. U.S. financial corporations are hoarding $630 billion. $630 billion, and have retarded the most incendiary effects of the Fed's extraordinary actions. QE, infinity. Okay, basically this money is being shoved down corporate America, banks, throats. Okay, and it's got to be employed somewhere. So the Fed, corporate America puts the money on the Fed's balance sheet. They get paid interest. It's risk-free. Okay, but the key issues will be whether these same corporations will begin to spend this cash. Because if they do here, the upshot is you're going to have an inflationary episode, the like of which would make post-World War II Germany Look like a walk in downtown Disneyland. All right, we'll be gassing up at $15 a gallon to go find a $20 loaf of bread that we hope is on the store shelf. Okay, so is that not a reason to buy coke the metals and hold them? Okay, straight up. And again, if you want to work with me, please feel free to give me a call. I've given you the number. Okay, I've given you my email address. Please comment, continue to comment. As you see, I'm responding to your comments. We're having a lot of fun here. I love a two-way flow of communication. This is a good thing. And again, going forward, I'm going to attempt to do two 10-minute rants a day. Okay, one morning, one afternoon. Okay, due to the response. Thanks, guys. I'm flattered. It's kind of fun to talk to you. Give you a little bit of an insider's perspective of what goes on in the Board of Trade here. And I love to hear what's going on outside these windows. Okay? So keep the communication flowing, and look forward to talking to you soon. Take care.